Hello and welcome to our latest Insider interview. Today in the studio I have with me Olivia Micklem, who is co-fund manager of the Artemis US Smaller Companies fund. Olivia, thank you for your time today.
Thanks for having me.
So Olivia, in terms of valuations for US smaller companies versus US larger companies, they're at the cheapest level in 30 years. Now, of course, there's been some strong share price gains for the biggest companies in America, the so-called Magnificent Seven. So what are the other reasons behind this sizable valuation gap?
So a few things have been happening over the last few years that have really driven that discount. It really started after the pandemic with the inflation we saw leading to the rapid rise in interest rates in early 22 and onwards. Generally speaking, smaller companies tend to perform less well in a high rate environment. The cost of growing their businesses, of funding their businesses gets higher and it makes it more challenging. Over time, it's had taken a while for those high interest rates to begin to come down. We finally started to see some of that happening last year, and that certainly helped improve the performance of the small cap group of companies and improve their valuation. But as you say, the really sort of superb strength we've seen from the Magnificent Seven in terms of the kind of results they've been delivering has continued to mean that the larger end of the market has been much, much stronger. As we've moved through last year and into this year, we've certainly seen the smaller companies part of the market perform a little bit better as people have started to have some optimism around what the outcome of the election is going to mean in terms of some of the policies we'll see from the new Republican administration. However, it's also come with a little bit of volatility, particularly more recently. And I think until you get that confidence that the economy is on the right track, that you have all the right opportunities ahead, it will take some time before that valuation gap starts to close. What's exciting for us as portfolio managers and as analysts is every time you see these opportunities coming at a discounted valuation, that's really exciting for us as stock pickers and as investors because we're finding great opportunities across the market.
And in terms of valuation opportunities, are you seeing them both within your existing portfolio and also outside of it in terms of potentially adding to new positions?
Absolutely. So we're always looking for new ideas across the market and across different sectors and continue to find interesting ones. But anytime there's volatility in the market, as we've seen in the recent weeks, it really gives us an opportunity to take advantage of some of the pullbacks you see in stocks that we really like and being able to add to them at a time where we think the valuations are possibly too low. And
could you outline some of the opportunities that you're seeing at the moment? Could you name some stocks that are trading on cheap valuations?
Absolutely. So, for example, we own a business called Globus Medical. They are a business that makes spinal implants for spinal surgery and other orthopedic procedures. We think it's a really, really great business, but for various reasons, we think the valuation is too low, and that to us is a really exciting opportunity. In a different sector, we own a business called Indie Semiconductor. Again, a great business selling semiconductors into the automotive industry, where we think the valuation is looking really, really attractive and certainly underestimates the opportunity in the business in our view.
Donald Trump has returned to the White House. One of his policies is to reduce corporation tax rates for domestic producers. Will this benefit US smaller companies as a whole, or are there certain sectors that will benefit more than others?
So I think for all of the businesses that are domestically focused, as you say, tax cuts will be a benefit across the board, irrespective of sector. So there is certainly a lot of appetite for smaller companies to see those tax cuts come through and see the benefit of that. But in addition, some of the tax policies that are potentially on the cards include also income tax cuts as well. So you'd also see the benefit across the consumer complex of people being able to take more money home in their pocket at the end of the month and perhaps reinvest that back in the economy in terms of goods and services that they might go and spend on.
Another of his policies is, of course, tariffs, which are dominating the headlines at the moment. How are tariffs impacting the companies that you hold within the fund?
Well, first and foremost, what we've certainly seen in the market across the board is a lot of volatility. And the reason we have seen that is while we know that the tariffs are coming, the specifics of the policies have been moving around quite a lot. So I think all of that uncertainty does tend to create volatility in the market. But for the businesses themselves, until they actually know what the tariffs are going to be, how long they're going to last, and what impact they will have, it's a little bit difficult for them to start making changes in terms of their own strategy of how they might manage through that. I think many businesses have plans that they're ready to put in place, but until the firm policies are enacted and we know exactly where we stand, it's a little bit tricky for businesses to do that. So I think everybody's looking forward to having a little bit more clarity on how those tariffs are likely to work.
But it would be the more larger companies that earn more money overseas that would be more affected by tariffs?
Potentially, yes, those with global supply chains are certainly more exposed. Nonetheless, there are many businesses that may generate most of their revenue within the US that might manufacture or source some of their goods from overseas. So there are still parts of the smaller companies, part of the market, that will also be exposed.
And do you think Trump's policies, particularly on potentially reducing tax for domestic producers, that'll prove to be a catalyst for US smaller companies?
We certainly hope so. We think that really this idea of tax cuts and also deregulation, which is another big part of his policy platform, are very, very beneficial to smaller companies over time. However, until we get some of, as I say, the clarity on what it's going to look like and certainly get the tariffs put in place, we need to move past some of this near-term volatility before we're going to see the benefit of that play out over time. Nonetheless, I think we're very excited about what the longer-term opportunity will look like, because ultimately the policies are all intended to stimulate the economy and grow the US economy, and those businesses that operate there will undoubtedly benefit.
As you've mentioned, there has been short-term volatility, particularly over the past 3 months. So why has it been such a tricky period?
I think the market likes certainty, and we don't have a lot of that right now. We have an idea of what some of these policies might look like. We have an idea of what some of the longer term policies could look like, but nothing's been firmly decided yet. And I think in any situation where you're not entirely clear on where things are going to go, the market becomes a little bit volatile. I think we've had a lot of headlines and a lot of activity, but we really need now things to get firmed up and know where we stand. And I think then once the market understands that, it's easier for it to price in what those risks and opportunities look like, and it's much easier to move past some of this initial noise.
But in terms of investors that are taking the long-term view, which they should, particularly when you're investing in smaller companies, the low valuations are a potentially really good starting point.
Absolutely. And I think as stock pickers, anytime this sort of volatility appears, for us, it offers us lots of opportunities, both with new ideas and to add to existing ones. So for us, we like to see this as more of an opportunity. And then we're looking over the longer term about what all the benefits of these policies will look like. And we're able to buy businesses that might benefit from that at really, really attractive valuations.
And finally, do you personally invest in the Artemis US Smaller Companies Fund?
Yes, absolutely. We think it's really important to be invested alongside our clients, and we're really excited about the long-term opportunity for US smaller companies.
Olivia, thank you for your time today.
Thank you for having me.
So that's it for our latest Insider interview. Hope you've enjoyed it. You can let us know what you think, you can comment, and for more videos in the series, do hit that subscribe button. And I'll hopefully see you again.